In this video, learn exit strategies for your trading to lock in more profits. Be definitive.
Hi, I'm Mike Bellafiore, co-founder of SME Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community.
In this video, two developing traders break down their exit strategy in a winning technical Tesla trade with critical feedback from me. Let's get to work on sharing these important trading lessons so you can grow your trading account.
So this is a higher time frame consolidation short squeeze into all-time highs in Tesla, which has been a stock that continues to break higher with outstanding follow-through in volume, price action, and fundamentals. This is a trade that both Nathan and I took long at different times in the day, and it had similar technical variables that we distinguished to have an edge. The setup that we saw in this trade was a big dog. These variables have edge, and what creates the big dog breakout. We want to see a stock in play with an RVO over 2. It's holding above VWAP, tight consolidation wedge pattern, elevated volume confirming the breakout, significant amount of time in consolidation. And I think the more time it spends in that consolidation, the more significant the breakout can be. Volume in that wedge is relatively decreased. It's a highly shorted stock because that adds some fuel to the fire. And then to the backside or to your reason to sell, you want to see the change in character. Some of these variables can be blow off top, breaks EMA. You can use ATRs for a guide to an exit.
Do you need to see an ascending triangle to make this trade?
No, it can be a asymmetrical triangle. It can be a wedge formation where it's higher lows and lower highs that wedge into 1 point. I just wanted to put that in just to visualize that the price action gets tighter and tighter, but it absolutely does not have to be that flat top where it's like it's hitting that offer and it's not able to break that offer.
Right, gotcha.
And then another reason to sell is a series of lower highs. And with the reason to sell, I don't think it should be just one of these things. I think it should be a culmination of a couple of them, maybe 3. But putting multiple factors together to make a decision to reason to sell will increase your odds of getting that full bulk of the move in the big dog, because the goal of it is to catch the bulk of the move and get big.
Feels to me like you're going to get a little bit trapped knowing whether or not you should get out of position based on what you just said. It feels to me like you're not clear enough on what's going to get you out of this particular position. So you said, hey, well, maybe it should be a couple of them together. I don't know what that means.
If we see a breakout and it shows the variables of a blow off top, like we see that big wick up on a 1 minute candle and the volume surging in, and we see it price pull back, maybe that would be one of the variables to sell. But that also could be a pull in, and we could be watching the tape and we can see like, oh, okay, I see on the tape that the buyers are still holding the bid and their most transactions are still on the ask. So maybe this is a trade that can hold for a little longer and we'll see continuation as like a false breakout.
Okay, look, I posit to you to give that, it's worthwhile for you to give that some more thought. You don't always have to be exactly definitive as to how you're going to get out, but I don't want you to get caught not knowing what to do, being indecisive in real time. So it strikes me as an area to watch for your trading to see if you are getting indecisive about taking your profits or exiting a winning position.
Yeah, I can jump in and just say, the idea of this trade is to really catch a big move. So I think once you enter the trade, you really, you don't want to try and find that reason to sell. Like it should come to you, and I think a big thing for me and, with this trade would be to maybe move to a 5 or 15 minute chart, look at the bigger picture. And if we have, a real change where, maybe bids or supports are dropping where it was previously holding, and there's that really clear change on a higher time frame, I think that could be a good guide for this trade on a reason to sell.
If you want to learn 3 real-world setups that our traders use including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
I think the important things to take out of this for Tesla trade is we see relative to the past 4 days, we're holding in a range between $310 and $320. And then a little bit bigger picture, maybe like 2 weeks out, we're holding in a range between $300 and $320. These are different sectors. So what do you want to take out of this is that the momentum names have been outperforming. So like the tech sector, the large caps and the QQQs, and Tesla's contributing to this outperformance.
Coming into this day, there wasn't, a major headline or something that you would think should move Tesla 100 or 200 points. Biggest headline that there was is that Tesla could potentially be added to the S&P 500. Obviously this is significant and it could drive further demand for the stock. But in our opinion, I think the bigger catalyst in this trade is overall sentiment and psychology. Coming into this day, Tesla already ran almost 50% in a few trading sessions after that $1,000 breakout. And it was almost like the entire world was talking about Tesla. Every financial media network was talking about it. You would see a new headline every day. Tesla surpasses Volkswagen's market cap. It's the most valuable automaker in the world. More valuable than JP Morgan. So you would just, everyone was talking about this move. Obviously, when you have such an aggressive move and, a cult stock kind of like Tesla, there's going to be a lot of people shorting this move. And Tesla is already a highly shorted stock. It has those kind of perma bears, and, there are definitely funds that want to see this sub 1,000, maybe even in the 500 range. After a move like this, there are going to be a lot of people with a very extreme psychology. And that was really clear in the sentiment, in financial media, Twitter. And, I even had friends who don't know anything about trading or the markets, and they're saying, what's going on with Tesla? Should I buy Tesla? And usually when, retail traders and people who don't really know anything about the markets are asking about a stock, that's how we're getting to a very extreme psychological point. So I would say that is the real catalyst is, that psychology and sentiment coming into the day. The fundamentals, Tesla has that elevated short float, almost 10%. It had that crazy run the previous week, that $1,000 breakout. It was at 500-ish just 2 months earlier. So it had a crazy move. And another interesting point that we wanted to talk about, that's been mentioned a lot in the past few months is the impact that Robinhood users could have on some of these crazy moves. And, you look at that chart and you see as Tesla's price, just continues to rip higher exponentially, so does the number of Robinhood users accumulating the stock. That retail buying and that pressure definitely, we believe, could have contributed to this squeeze. And, it just shows that there is that demand from retail money pushing price higher. So that definitely played a role in our opinion. Another point we wanted to touch on, neither of us have enough experience in the options market to really go into detail on this, but we wanted to see if you could maybe clarify. There was a lot of talk that it's kind of like this self-fulfilling prophecy where people are buying these far out of the money calls, and that kind of drives the market makers and option underwriters to try and push the stock up to be in the money in those calls. And the 1480 calls were up by almost 4,000%, and it was a Friday and OPEX day. We think this had an impact, but we don't know enough about the options market to really speak on that. If you wanted to say anything, Bella.
Do you guys know how much volume was being done in some of the calls?
Once that breakout occurred, it was extreme. It was just, I don't know it off the hand, but it was extreme.
A couple of strategies some guys use. So some people look for what's called unusual options activity. And that can, if you are select about it, potentially give you some color as to what may be coming in the future. And then, yeah, if you're noticing that an unusual amount of action is being done at higher prices, then can that be a signal for you guys? Can that give you a little bit more confidence? Maybe that's another way that people are buying. Maybe they're buying the underlying stock. Maybe they're buying calls. Maybe the call to put ratio is out of whack, and you can start to utilize that in some of your decision making. Then certainly, what's happened with the firm is after you get good at equity trading, you start to gain the right to trade in different ways. One of the ways is to be able to express your positions in options. So for example, right now, AMD is one of the big runners, and this will be watched at a date where what I'm about to say, I can say because our guys' positions won't be impacted. But there were guys who in AMD, instead of buying the underlying stock, either bought calls expiring today or out in time, and or bought the underlying stock. And so that was a way that they have learned to express their trades. So yeah, good to be looking at this.
So here's the big picture chart of Tesla. You can see just how absolutely extreme that breakout was after 1,000. Coming into this day, we had those 3 days of somewhat consolidation and lighter volume. And that was after we already had that breakout from 1,000 and touched like 1430 almost. And at this point, you can just imagine how many people would be shorting that move. And maybe it's not totally irrational, almost 50% move in about a week. But there are a lot of people that are now wanting to see this break down. And it almost does that a few days before, but it holds. So price not being able to break down on that daily chart is a very, very significant tell.
During this intraday, we experienced 2 wedges form. The first one, I liked really a lot more, but I didn't see it coming. We're seeing price get tighter and tighter and tighter, and that volume just stay low, low, low. And we're also wedging right up against all-time highs, which previous to this breakout was 1,429. We get this move higher, and then we form into another wedge, showing that the sellers aren't really interested in getting bigger in the positions, and the longs aren't really interested in getting out of their positions. So we're just holding higher. And yet again, we get that lower relative volume, and then we get the breakout on elevated volume.
An interesting part about this trade and why Colman and I wanted to collaborate on it is because I took the first wedge and Colman took that second breakout. And on this first wedge, I was watching Tesla the entire morning. It was top watch for the day. And I actually tried this move right here, that first attempt at breaking out from 1420, and that move did not work. So I had, that previous context of what a breakout that didn't work looked like, and then I saw, the breakout that did work. Why I was watching this very closely and why I thought it could be an absolutely massive trade is because I was really thinking about where other big participants were positioned. It all comes down to that psychology, that sentiment, Elon Musk releasing those shorts, mocking short sellers, the SEC, everyone talking about Tesla. Like 1429, that previous all-time high, that's where, all those shorts logically would be risking off of. So this wedge right under that level, a lot of shorts would be nervous at this point. And when that breakout happened on elevated volume, that is showing us that, yeah, our trade is working. There are now new players entering this trade. There are those shorts that are now trapped and have to exit, running for the gates. And, there are now, new algos, new funds coming in and driving price higher.
All right, so this is Wedge 2. This is the trade that I took. I think some of the important variables to see here is that now we're right into new all-time high territory, so there really isn't too much resistance above. Price is above 1 ATR from opening. It's holding half an ATR from VWAP. So it's much more extended compared to the first wedge. The time of day is different. We're holding around 1:30 to 3 p.m. in the afternoon. The time it held in the wedge was 36 minutes. And another thing I thought was very interesting is it's wedging right up against a huge psychological number of 1,500. And same thing with the dried up volume, and then we get that breakout on elevated volume.
So this is just a quick Venn diagram we made, just showing that these are very similar setups, but they have their slight nuanced differences. The first wedge within half an ATR VWAP, still below all-time highs, so shorts were still okay at that point when it was consolidating. Time of day, it's actually interesting that the breakout occurred at usually the lowest volume of the day and lunch hour. And then the time consolidating, that first wedge was a bit longer than that second wedge spent consolidating. So, there was more of that battle of buyers and sellers and more indecision. And then Colman's wedge 2.
I thought that was interesting, the time of day. I think that definitely plays a role in this setup. Even though Tesla was extended pretty high from VWAP, because of the time of day, I believe it had that extra push to close high a day. Another factor is that we got that consolidation for 36 minutes. And also, I think it was important with wedge 1 is Nathan had that first wedge to consolidate for 51 minutes. So that's a lot of time. That's a lot of price compression, because with compression leads expansion. And then we can talk about some of the similarities between these two wedges is that they both had lower relative volume in the consolidation, elevated volume on the breakout. They're both holding above VWAP. Shorts are trapped, and we're wedging against all-time highs.
When you're coming up with your playbook trades for a particular strategy, you're going to have a sense as to what variables you want. But with certain trades, they're not all going to be there. Each trade's going to be different. Shark is famous for saying that. Each trade is going to be different. Each trade is a little bit different. And you are going to have to make some decisions as a discretionary trader in real time as to how you're going to handle the fact that maybe not all your variables are here, but a lot of them are. How much risk do you want to put on? Maybe this trade is a little bit different than the other one that just worked. What are you going to do? What the importance, though, of outlining the variables is that you won't have to think about as many things in real time. You'll be able to make better trades because you're only perhaps considering one or two things as opposed to 10 things in real time as data is moving around really quickly. And so, it's good to acknowledge that there's going to have to be some discretion that goes into this, but you can set yourself up to be able to make easier decisions and to be able to use your discretion better by going through a playbook and understanding what you trade best. You shouldn't expect everything to line up perfectly. That's not realistic. You should expect yourself to have to be observe and use your thinking during real time. All right, so good to point that out.
So now we move on to the tape of the breakouts, and I'll talk about the first wedge breakout because I took that trade. I was watching this. I tried that first breakout over here, and it just wasn't ready yet. Not enough time spent consolidating. And so I knew what the tape looked like when the trade didn't work. And then I was watching it now. You can see once we break that 14-15 level and, the wedge is kind of clear, we just start really accelerating with volume coming in. A lot more green on the time and sales. And at this point, the trade, I was literally screenshotting it for my book of charts because, the breakout was so clean and so textbook that I just had to save it. And, the tape had a clear change. It was so clear. And since I'd been watching it earlier and I knew what the breakout looked like when it failed, I now knew that, yeah, this was different. There's a new level of volume. They just lifted price like $10 within a few minutes. So, there are new participants coming in, and there is new liquidity coming into this trade. Yeah, now we're coming out, all-time highs are 1429, and I zoomed out to the daily. Right when we broke all-time highs, you can see this is when every short is now very worried, and price just begins accelerating incredibly fast, and the trade is working. I'm good, but I really should have been just looking at that higher time frame, sitting on my hands and just not trying to get fancy with anything and really look into the tape too much anymore, because this is now a bigger picture idea. We're above all-time highs. Every short is trapped and stuck. They're going to need to cover. So I should just be really sitting back and, like I said earlier, waiting for that reason to sell to come to me, rather than me looking for a reason to sell just because, I'm thinking, it's gone up too much or whatnot.
All right, so this is the second wedge. I think there's 3 critical points to see in this trade. The initial breakout of 1500, the pull back into 1497, and then the continuation higher, which I would consider the real breakout, when the volume and the speed of the tape really comes in. Yeah, so right there we get the break of 1500, and I think right away instantly we move up $3, and so as soon as we get that break up a few dollars, we see a lot of transactions on the ask, a lot of big prints on it. But right there, like the offer step up, and we get a move back under 1500, which we'll see coming right here. Oh yeah, so we spend a little bit of time up here. The volume isn't really ideally coming in. Price isn't moving away. So we get the pull in to 1,497. It gets aggressively bought up and holds. The bids don't get dropped and price isn't getting stuffed lower. So that's showing that we're likely to see the continuation higher, that fake out was just shaking out some more shorts. Maybe some shorts are still adding to their positions. And then we get that break and continuation higher right around the 4-minute mark. Okay, yeah. So yeah, right there, watch the time in sales. You see it's just all big green prints are just coming in, and then we're just gonna break that new high a day, and then right there, boom, look at all those transactions on the ask, and look at the size of them. We just get that this is a legitimate move, and it's likely to have that continuation and follow through higher as price is moving away. And yeah, another factor, now we're up to 5, 15, 12. I think another thing that's important to see is that we're spending time right at 1500. And that time spent there maybe creates it from a B setup into an A setup, because now we're just consolidating right against that 1500 and we're spending time there. And we're not getting a move lower, and then we get that flush higher.
Yeah, so that's an important point. You can, just based on the tape, have a stock go from a B trade to an A trade because of what you're observing. It may be very clear that there's a strong buyer or seller from the tape that gets you to upgrade the trade from a B to an A trade, a B to an A plus trade. And that's important to being open-minded, seeing it, and if so, then making sure you have enough risk on appropriate for that type of setup.
So now we come into the trade management. Honestly, this could be a half playbook, half anti-playbook, because I did not trade this as well as I should have, given how many variables were aligning, and the fact that I was seeing all of this happen in real time. And Colman can attest to this. It's funny. I said in the chat in Discord, this seems like a good potential hold into the close. I couldn't stick to that, and so my first entry was that 14-15 break, when the tape confirmed it. But then I make a really, really stupid trade decision where I take half my risk off below that 14.29 all-time high. And I did this because over the past few months, I've kind of found a niche and edge in scalping and very quick trades. I'm usually not in trade for more than 5 or 10 minutes. So I was still in that mindset, and I was still too focused on that 1 minute chart, and the tape when I should have just been sitting on my hands and remembering what kind of trade I am actually taking. And so I wasn't in real time remembering and telling myself, this is a bigger picture idea. This is a potential trade to hold, not a scalp, not a move to move. This is a really big technical breakout. So then 1460s, I meant to take another 10% off there as we were getting a bit steep, but my hotkey, I fat fingered the wrong hotkey and I got flat, which was frustrating. But I just got a pretty big move, so overall, I couldn't be too mad about that. But then, where it's highlighted C, this is where I could spend a whole hour, as an anti-playbook. I was playing for that 1500 break, but now I'm kind of chasing, and I'm a little bit on tilt because that hotkey incident happened, and I wasn't big enough in the trade, and I knew it, and I should have made more, and so those are all triggers for me to get me on tilt, and I was. And so then I was just, taking all these different scalps, looking for that 1500 break, and I was just too early. I wasn't patient enough. I didn't wait for the tape to confirm it, and I just was getting chopped up and gave too much P&L back. So after that, I had to just take a step back from my trading desk, go on a quick walk, listen to music, and of course, the trade that I was looking for did happen a few minutes later, but, overall on this first breakout, I'm glad that I took the trade, but there was so much room for this to be, one of my biggest trades ever if I traded it well.
Same thing with Nathan. This definitely, we were both had the right idea, but weren't thinking about the bigger picture. My mindset coming in this trade was it should work right away as soon as we break that 1500. Sometimes we get that fake out and then we get that pull in and where the real buyers come in to get that continuation higher. I wasn't thinking about that, and that's one of the biggest mistakes in this. Some of my realizations is that we would get this massive 36-minute consolidation at all-time highs. The volume's coming in continuously throughout the day in this up move, and we created multiple inside bars on the 5, 10, and 15-minute time frames.
Expensive stock. Do you feel like this is a stock that you can trade at this point of your career? Feel like it's too hard? Feel like it's too spready? What are your overall thoughts?
For me, yeah, before this summer, I was never trading a stock over $1,000. So, but the previous weeks I had been, practicing with very small size in trading Tesla. And, I did notice that it touches so many prices. So, I can't be too big initially. But on this trade, I was so convicted and, I just really was confident in it that I entered full size right away. But I think the better thing that I should have done, given, it's so wicky, it can just jump around and, you can draw down a few times. What I should have done was enter half at that 14-15 break and then add another half or, maybe one or two full tiers above that 1429 all-time high. And the fact that I didn't get back in once we got over that all-time high and added that size that I took off, that was probably the biggest error, because once we were over that all-time high, I knew every short was trapped and there was nothing they could do, and the volume was just pouring in, so it was an A++ trade and very high probability. But yeah, going back to what you were saying, it was new for me, but I'm glad I got this experience in this trade.
For me, Tesla's actually been my most profitable stock I've traded throughout this summer. I just checked out my TraderView stats. In Tesla, currently have a 66% win rate. A lot of times I'm scalping based on price action, and it does touch a lot of prices. And I think because of the momentum and because it touches so many prices, that's why I've found success trading Tesla.
So now onto our intuition. The biggest thing for me in this trade, what I spoke on earlier, thinking about the psychology coming into this day, how extreme sentiment was. You had one side saying, this is a bubble, this valuation makes no sense. And then you had the other side saying, yeah, maybe that move was a bit aggressive, but the market is finally realizing and pricing Tesla to be the dominant automobile and autonomous driving company over the next few decades. So thinking about where those other market participants would be positioned is, why I was really confident to take that initial entry, and knowing that so many people wanted to see this breakdown the few days where it was kind of consolidating above 13 and 1400. It made me think of a quote from Brian Shannon: "From failed moves come fast moves." So when Tesla didn't break down, and when everyone thought it should break down, there would be a lot of people trapped and a lot of people needing to cover and exit their positions.
Yeah, just going off what Nathan said, I need to be thinking about where other market participants on the bigger picture to also add conviction to my trade. I should be thinking about that 10% of the shorts or shares in Tesla are short, meaning that there is still a chance for a continuation squeeze higher. And most longs in this position are in the money. Looking back, I need to hold a larger core and think about, in this situation, what should be my reason to sell, and be very flexible with that. And putting together the variables will give me clear conviction for a reason to sell.
My trade review and what I could have done better. I could have done so much better on this trade. I knew it in real time that I wasn't big enough. I knew when I took that half off, I should have entered back in, at least when that all-time high broke. And then I should have, biggest thing, just zoomed out, remember the bigger picture, remember why I'm taking the trade, and really thinking about how many big players are trapped. And that's why I took the trade initially, and that's what I should have been thinking about the entire time, not just looking at the 1 minute chart and the tape. And since it does touch so many prices, I shouldn't have been so focused on the tape once I was in the trade.
Yet again, same thing with me. Just looking at those larger time frames, specifically 5, 15 minute, 30 minute, and 60 minute, to have an overall standing what's happening now and what is reasonable to what's going to come next. But yeah, the rest I talk about is exactly what Nathan, I think, is what I could do better.
So then we just have the technology slide. With this setup, it's relatively a simple setup, and we should be able to code it, work with Nick, other interns that have similar scripts, like consolidation scripts. What we would need to code and look for: an elevated RVOL greater than at least 2, it has to be above VWAP, a consolidation of at least 30 minutes or more, a range of no greater than a quarter daily ATR, preferably lower RVOL during the consolidation phase, at least 20% lower. And then an elevated short float is optional, but definitely, is ideal and can add some more fuel to the fire. And within 5% of 52-week highs or all-time highs, and above all major moving averages.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next, and what you found helpful from this video. From all of us at S&B, train and trade well.